So once again, back, and we are looking at OTC, small caps, uh, things that we think are getting ready to run, scanning, so that we can help make you profits. So what's going on with TAWNF and the rest of the OTCs we're looking at?
Um, yeah, at this point, yeah, I'm pretty focused on TAWNF. Like one of the things I like the most about this play, I've traded it several times, is that it's a pretty large amount of institutions holding it. And for me, that's key because, like I said, I know once they have a couple down days and they find support, it's a super low risk, high reward. Getting in anytime they're down and they've established support. So right now I'm in them pretty heavy, and I just got my full position today and today. And so pretty much I'm looking to start scaling out once it hits, around 26, 27 cents. And at the point that we're at now, that's just pretty much an easy way. You can pretty much double your money, it looks like, in a short period of time. So that's the main thing I'm watching at the moment, but I'm pretty bullish on airlines as well. I know I made a pretty decent trade on NO KPF last week, and it's an airline play as well. So that's pretty much what I'm watching pretty strong right now.
Yeah, we're looking at, like you said, institutional holding. So whenever we look at or consider a company being legit, then we're looking at, like, who where's the smart money, who are the big people holding these funds. So you see somebody has 14 million shares, 13 million shares, 3 million, 1 million. So it just helps the legitimacy of the company. Am I correct?
Yeah, that's how I look at it. I mean, if you're following smart money, I mean, Vanguard International Stock Index Emerging Markets Fund is not gonna invest in a company that's not legitimate, that they haven't done due diligence on. Like most of these funds have a whole department of people whose job is to do due diligence. So that's something to make you feel pretty safe when especially if you want to hold this long term. I mean, you can kind of know you're putting your money with smart money. And that's kind of the basis I'm using to trade it. I mean, like I said, I'm buying the weakness and selling the strength. But like if it has a couple down days, I'm never gonna be panicking. I'm always looking, as soon as it establishes support, I'm jumping in because I know at that point it's a low risk. Because I mean, if anybody looks at these institutional holders, they're gonna know it's some legitimacy there, and it's gonna be a lot of people thinking the same thing I'm thinking. So it makes it a little bit more predictable when you can kind of feel confident knowing the institutions are holding, especially OCC company. In Nasdaq, nothing but institutions hold large shares, but OCCs is not that common. So when you see it, especially when they're holding millions of shares, and you can pretty much be confident that their company is not going to go bankrupt tomorrow and disappear.
Right. So yeah, got a few more sympathy plays too. We talked about KPF and another airline, similar chart. I mean, all these charts start to look the same. So, but the great thing is this is getting tons of volume. I mean, tons of volume. So hey, you just have to, and again, it's presents a good opportunity to buy these dips. So I want to talk about that too. Just touch on that, a new way of trading. So people talk about chasing. Unless the market is just making you money every entry that you take, entry is the most important thing. So try not to chase. I'm going to give a couple examples on small caps. So Allied Healthcare ran like crazy with no news, but let's look at the chart. Like when is the best time to buy? Like charts like these are almost becoming extinct. Like you're not getting a breakout with levels just holding all the way to the top. Okay. So um this is not a great example, but this is a great example of how you would prefer a trade to look. But we're just not there in this market. The market's job is to take your money and not let you make big profits. So um I'm gonna look at a couple more, um, and then we can kind of illustrate my points from yesterday and today. So the only way to buy now, in my opinion, is when these stocks starts to break support. So you see these different support levels here. You see support levels right here. You see support levels here, and only until I'm only feeling comfortable when these stocks break down way below support, because they're trying to shake as many weak hands out before they take off again. Let me give you another example on SGOC. Um, you know, I'm just look at the uh, the shakeout. So in the beginning, when it first started getting volume, it just ramped up a little bit. But now, if you're chasing this, if you're chasing this stock up here, you're going to be feeling a lot of pain, because at $18, once it dips in just a couple hours at $9, that's a 50% loss. So whenever being patient and getting the best entries is super critical right now. I'm only buying stocks once they look like they're completely finished. If they're finished, then I'm going to get stopped out for a small loss. If they're not finished, then look what happens. We make new highs because, I mean, basically they were just waiting until everybody gets out to make another run. So again, the next day, uh, you know, we had a nice run. These levels are holding. Then all of a sudden it consolidates and breaks down $17, and now look, $9. So whenever you're looking to buy at the get your entry point. So again, this is a new level. Chasing is getting more and more overrated. Um, if you're chasing, you better have a super tight stop and be an expert. So jumping into some more plays before we go is a couple OTC, RGBP. Oops, sorry. So RGBP, remember, they came on the scene with a drug that was groundbreaking. So I mean, we've seen this stock go from basically 001 to 8. So 20x, 30x your money in a couple of days. But um, what's the news? What was going on with this stock? There was a breakthrough drug, a breakthrough treatment that had everybody jumping on this thing. So uh, they're looking to bounce. They're starting to get back volume again. So we'll see what happens. Also, Hertz. Hertz is now we talked about um, institutional holdings. HTZGQ, is that what this is? I believe. Nope. We talked about institutional holdings. I can't get to it, but anytime you got a big brand that goes into bankruptcy, 41 cents. So from 41 cents to $9, that's basically 20x in your money. So again, just doing your due diligence, uh, exiting Chapter 11 bankruptcy. I mean, this is the best setup. You buy low and sell high. So not gonna do too much today. Just wanted to kind of introduce some uh, trading principles. Number one, buy on extreme dips. Like this, I can't stress this enough. If you are chasing, you're going to get caught. Okay, these algorithms are stopping you out. They're shorting, and then after everybody's out, they're buying them up again and running them up, and then you're upset because as soon as you sell, they run. Okay, that's what they do. Um, so like I said, whenever you're researching these stocks, forget what everybody's saying on Twitter. Forget all these experts. Look at how many institutions are holding them and how legitimate they are. And then when you get in the trade, make sure that you wait for your price until it comes all the way down so that you can get into a good entry. Because remember, it doesn't matter where you sell, it's where you buy. That's the most important thing. If you buy anything too high, you're subject to lose money. If you buy something super cheap, it doesn't matter how the market turns, you've still bought well enough to where you put yourself in a position to profit. So that's pretty much it. Look at a couple more charts. XELA, we talked about that. Uh, again, look at this. Again, look at this volume. Look at this non-existent volume, and then all of a sudden we start getting 100 million share, 400 million shares. Okay. Um, what else? CYBL. CYBL was another stock that wanted to run and make new highs. We're just giving you some OTCs that people are making really popular, that have a chance to really do what everybody is saying that it can do. Um, and the last one that we want to talk about is, drum roll, please. KRFG. So again, we talk about first big volume day. You get in right here, 00, first big volume day, and you're really never in jeopardy if you can hold or at least scale out. I mean, from 001 to 3. How much is that? I always like to calculate profits.
Yeah, so this is a beautiful
30x.
setup.
Yeah, it's a beautiful setup. 30. You're 30xing your money from just from getting in on the big volume day. Uh, scaling in, uh, because once it starts holding the 20, um, you got a chance at a monster, because this stock had every reason, every right to sell off, and it just doesn't. So
Yeah. Yeah, with the OTCs, what I've noticed, you can't really go wrong. If it's a lot of hype behind it and it's trading technically sound, that's an easy play. Because I mean, you can define your risk easily. And if you're scaling in, like this is beautiful. I mean, get your entry. I mean, as soon as it's on support, you can buy, and it's pretty much holding every support level. So you can define your risk easy. Like these are the type of plays that I look for all the time.
so I'm looking at the breakout levels. Uh, once it got volume and it held support, I mean, you really didn't have anything to worry about. It just keep building higher support, higher support. Once it consolidated, it got the volume and broke out again. So hey, this can be another big one. Not really worried about why they're running. We're just worried about if they're running. So again, subscribe, bell icon button. We are available if you have questions, email, text, and if nothing else, we will see you on the green side. God bless.